Welcome to everyone. This week video will cover the S&P 500 for the week of March 31st, 2025. Before we start, make sure you read carefully the disclaimer. Since we are expecting a major low occur in the next few weeks, this week video will focus more on intermediate and long-time perspective. Let's start by the 80 days cycle. On March 13th, the S&P 500 formed his third 80 days cycle of the actual 18-month cycle. This 80 days cycle lasts 77 days. 9 days longer than the 68 days average length of the Hearst nominal model, confirming the S&P 500 is in downtrend. In the downtrend or in a bear market, usually the cycles run longer than in an uptrend or in a bull market. The peak of this 80 days cycle occurred on the right part of the cycle. The purple arrow. Since it's the fourth and last 80 days cycle of this 18-month cycle, the next peak should technically form on the left part of the cycle, close to his cycle line without crossing above it, and finding resistance before resuming his decline into his 18-month cycle low, around May 29th or even first week of June. If the S&P 500 crossed sharply above his 80 days cycle line, then we may reconsider the labeling of the March 13th low, which is in any case the low of at least an 80 days cycle low, but in this case potentially the 18-month cycle low. On the roadmap, we just start this new 80 days cycle on March 13th. Then the S&P 500 crossed above his cycle line on March 24th at 5,642.92, providing a target at 5,781.27. 138.31 points or 2.45% of potential profits. The peak of this 20-day cycle formed on March 25th at 5,786.95. Then the S&P 500 start his correction on his way to form his next 20 days low, expected on Monday, March 31st. During this 20 days low formation, the S&P 500 should find support on his cycle line, then rebound on his way to his 40 days cycle peak. After forming his 40 days peak, the S&P 500 will cross below his cycle line, providing a downside target for the 40 days cycle low, expected to form around April 16th, plus or minus 2 days. Then technically the S&P 500 should cross above his cycle line, on his way to the 80 days cycle peak. And the crossing above his cycle line will provide an upside potential target. But since we are in the last 80 days cycle of this 18-month cycle, there is a possibility the market won't reach his target, and maybe even won't be strong enough to cross above his cycle line. After the 80 days cycle peak, which should occur on the left part of the cycle, the S&P 500 will resume his decline on his way to form his 80 days cycle low. But before reaching his next 80 days cycle low, the S&P 500 should form a first low around the first week of May, then rebound using his cycle line as resistance, then decline again to form his low around 5,446.96, or even lower. The 5,446.96 is the minimum target on May 29th. With 2 trading signal, 1 negative and 1 positive, the success rate is 50%. On the longer term, by the end of May we should know if the S&P 500 enter in the bear market territory, or if he's still in the bull market. Depending where the 18-month cycle will form, we will be able to confirm if the bull market is still intact, or if we are in longer cycle than the 18-month cycle, the 54-month cycle. If the very long-term analysis is correct, technically the S&P 500 should stop his correction at his 18-month cycle line, which will be around 5,385 by the end of May, beginning of June. If the S&P 500 cross sharply below his 18-month cycle line, then with a very high degree of confidence, we can call the S&P 500 bull market over. And if the crossing occur around this price, this will give a potential downside target of 4,625, or 14% decline. In this case we may have to switch to the bearish scenario. Like I mentioned in a previous update, we should always have 2 scenarios. If the S&P 500 rebounds sharply after forming his low around his cycle line, then, at least for now, the bull market's still alive. Anytime during the summer, the SP 500 cross below his 18-month cycle line will be a warning of the possibility of further decline. Here the table with the 18-month cycle line for the next few months, with the potential downside target if the SP 500 cross below it during the summertime. If the 18-month cycle form is expected end of May, and on his cycle line, this means, during the rebound following the 18-month cycle low formation, the SP 500 will make a new all-time high? Not necessary, all depend, when and where the SP 500 will cross above first his 20 weeks, then the 40-week cycle line. For the 20-week cycle line, is too early to know where they're going to be after the week of May 27th. On May 27th, the 20-week cycle line will be at 5,740. Assuming the 18-month cycle low occurred at 5,446.96, the potential target will be 60.34. Here, the 40-week cycle line table and their potential target for the next 2 months. As reminder, if the SP 500 make a lower low or higher low than the 5,446.96, the target will be recalculated according to the Hurst rules. Like I mentioned in my previous update, it is very unlikely the SP 500 will make a new all-time high before the summer. To anticipate a new all-time high, we need the SP 500 cross above his 20 and 40-week cycle lines. Just as reminder to be a valid signal, the signal is triggered when the median price crossed the cycle line, and not any part of the chart. Here the 18-month cycle roadmap. For the 18-month cycle roadmap we have to use the 20-week cycle line. The starting point is where the last 18-month cycle made a low. This was on October 2023. From that point, the first 20-week cycle is expected found support on his cycle line at 4,953 on April 2024. Then the SP 500 rebound informed his 40-week cycle peak at 5,669.67 on July 2024. Then, as expected during the second 20-week cycle and the first 40-week cycle, the SP 500 crossed below his cycle line and provided a 4,939 target on August 2024. The 40 weeks low 5,119.26 missed his target, which is a bullish sign. Then the SP 500 the market crossed back above his cycle line, providing another upside target, which was meet and exceed. After forming his third 20 weeks peak on December 2024, the SP 500 kept trading along his cycle line and formed his third 20 weeks low in January 13, 2025. The SP 500 crossed below his cycle line, providing a downside target which has been fulfilled. At the time of this update, we are here now. In conclusion, we are in the last phase of this 18-month cycle, and we have a target zone between 5,446.96, which is the 40 weeks target, and the 5385, which is the 18-month cycle line. But we have to keep in mind the possibility of a formation of a higher degree time frame cycle, like the 54 months, in this case more decline can be expected. If you enjoyed the video, please give it a thumbs up to support my channel. Share it with others, and subscribe so you don't miss any important updates. This concludes this week's video. Thank you for following along. And I'll see you next week with another exciting installment.